Welcome to Trading Mechanic. Let's do it in a better way. We're currently looking at the price of BTC USDT on a 5-minute time frame. And this strategy consists of 3 free TradingView indicators. For the first indicator, let's add trendline with breaks. This indicator by Lux Algo. For the second indicator, let's add an exponential moving average. And finally, let's add a regular volume to the chart. Now, in order for this strategy to be complete, we need to adjust these indicators. So let's first double-click on this trend line with breaks indicator and change the length from 14 to 24 and the slope from 1 to 1.6. Also enable this option. Now let's access the settings on an EMA and change the length from 9 to 200. Also, let's make the line a bit more visible. And finally, let's add a moving average to the volume. Okay, the strategy is complete, and now let's briefly understand how these indicators work. So first of all, let's talk about this trend line with breaks indicator. This is a really powerful tool because it automatically identifies the times when the price makes a breakout. So if you have, for example, a bullish breakout when the price crosses and closes above this green line, the indicator will print a signal below the price. Exactly the same is true when the price makes a bearish breakout. Based on the signals of this indicator, we're going to be placing buy and sell orders. Obviously, we cannot be using this tool on its own because it issues quite a few for signals. So that's the reason I added another 2 indicators to the chart. The general rule is simple: if the price action is above the EMA, we are in an uptrend. And if it is below the EMA, we are officially in a downtrend. And finally, our strategy wouldn't be complete without having a volume indicator on our chart. This is a really simple yet effective indicator, especially if you add a moving average to it. And his goal is to prevent us from taking trades when the market is moving sideways. Okay, now let's understand the rules for the strategy. So as I said, we're only going to be looking to buy if the price action is closed above the 200 EMA. The next condition will be to have a bullish breakout. This is where the indicator issues a green label with the letter B below the price. And finally, to confirm the trade, we need to have sufficient volume in the market. This means the volume histogram has to be colored in green and it has to be above this moving average. And once we have these conditions met, we can safely enter a long position as stop loss will be set at the recent swing low and we will be targeting 5 times the risk. We see how easy yet effective this strategy is. First, we identify the overall trend direction and then we find in the best possible price to enter the trade. In terms of money management, you can use a different risk-reward ratio. And if you want to learn more about money management, make sure you've watched a video where I compared different money management strategies. That video will save you so much time and money, so make sure you watch it. Okay, now let's move on to the rules for entering a short position. So first of all, the price action needs to be closed below the 200 EMA. The indicator needs to issue a signal that we had a bearish breakout. And finally, the volume has to be bearish, which means this bar has to be colored in red and it has to be above this moving average. And only when we have these rules met, we can safely enter a short position. A stop loss will be set at the recent swing high and we're going to be targeting 5 times the risk. Okay, let me give you some more examples so you have a better idea on how to trade with this strategy. So here we see we've got a bearish breakout and all the rules are met. By the way, if the volume indicator does not agree at the time when we have a bearish breakout, we do not wait for it to catch up, we just simply ignore the signal. Okay, so we see this trade turned out to be successful, but the price kept going in our direction. So this tells us that capping our profits is not always a good idea. So let's actually see what could have happened if we let our winners ride. Realistically, a good exit indicator would probably give you a signal to exit the trade somewhere at this point. So we see that the risk-reward ratio can get up to 16-1, which is absolutely insane. Okay, here's the scenario I was talking about earlier. We see the price action is below the EMA. We had a bearish breakout, but the problem is we do not have sufficient volume in the market, so we skip this trade altogether. Here's another great example. For a long position, we see how easily the price triggers our take-profit targets. You can also try this strategy on different time frames in different markets, but make sure you do your proper back testing and forward testing before trading live. Okay, traders, I hope you have understood the rules for this strategy. So yeah, the strategy is absolutely amazing and I'm really happy to share it with you. And if you could spend 1 second of your time and like this video, I would appreciate it a lot. Okay traders, that's it for this video. Thanks for watching and see you in the next one.